We all know the old adage, turnover is vanity, profit is sanity, cash is king. This is key to business success or failure. Cash flow should be the #1 metric business leaders are reviewing weekly, if not daily. Companies may be able to swallow a few losses here and there, but it is much tougher to swallow a cash deficit. In this video, we're going to look at what is involved in a business cash flow and some strategies to help improve your company's working capital cash cycle. Stick around to the end as we run through tips and tricks to help improve your business bank balance. Also, don't forget to hit the like and subscribe button for this channel. Money, money, money. Yes, cash is so important when running a business. It's what allows us to pay the bills, pay staff wages, and ultimately gives us the capital to allow us to invest in continuously growing our business. The flow of cash coming into your business from debtors and clients paying invoices to creditors and paying overheads and wages is called the working capital cycle. We always want to have a positive working cash cycle to ensure that we are able to meet our commitments, our liabilities. Here are 5 points to help your business cash flow to ensure you are getting the most out of your working capital cycle. Firstly, receipts. In a usual business, once we've completed the works or delivered products to our clients, we would then issue a sales invoice for them to pay. Generally, we would offer them payment terms in order to assist their working capital cycle, very much in the same way we would expect credit terms for our own supply chain. The key with agreeing terms is to try to get these agreed with as few days as possible, days being the number of days credit you offer your clients. Standard average payment terms are usually 30 days. However, an ideal scenario would be to agree 14 days, or even if possible, immediate payment. The key to operating a successful cash flow is to get money inwards, receipts, coming in as quick as possible, and then money outwards, payments, going out as far as possible. This leads us nicely on to discussing these payments. Number 2, payments. When we order materials or engage with subcontractors to work for us, once the work has been completed or products delivered, we would then be issued an invoice from our supplier for payment. Working with the previous example, we would like to ensure that we agree a minimum payment terms of 30 days. So as a worst case, we have 30-day terms agreed with our clients, our payments are agreed back to back. However, it is not uncommon for larger suppliers to offer longer payment terms. Working with a recent client of mine, we managed to agree majority of their supplier terms on 60 days, with even some few selects that were willing to support the business for exclusivity, granting us 90-day payment terms. Having terms agreed for this length of time allowed the business to utilise its cash flow to support initial outlay on new projects, as well as invest its cash reserves into supporting grow the business. Number 3, other payments. As well as creditor payments, your business will also have other payments that need to be made each month. These are usually due for payment immediately with no terms and include expenses such as rent, wages, electricity and gas, loan repayments, business rates, etc. It's important to ensure you maintain a sufficient balance in your bank to cover these expenses, and why you can start to see the importance of getting the right balance between debtor days and creditor days. This is so crucial to the cash flow of your business. The 4th point, tax payments. Unfortunately, there are 2 things certain in life: death and taxes. In the UK, a business has several taxes that will need to pay out each month. Examples of this include VAT, value added tax. This is a sales tax which is required to be charged to clients at the point of invoicing them. The current rate of VAT is 20%, applicable to most sales invoices. When we receive supplier invoices from our creditors, we are also being charged 20% VAT on their invoices. It is our responsibility as a business to pay suppliers the 20% VAT, but we are then able to offset this against any VAT we have charged to clients, and therefore we only need to pay the difference to HMRC. These payments to HMRC are usually made quarterly, and as they can be quite substantial, you will need to ensure you have sufficient funds in your account to make this payment. Another tax that businesses have to pay is PAYE. This is a tax related to employing staff, and as a business, it is your responsibility to deduct this from employees' pay and then pay over to HMRC. The PAYE tax is a monthly payment, usually due around the 19th of the month, so again, ensure you have the funds available to make this payment in your account. And the 3rd main business tax is corporation tax. This is the tax that your business pays on its annual profits and can range from 19% all the way up to 25%. Usually, this is prepaid in quarterly instalments based on what your anticipated profit for the year is forecast as. The 5th and final point we're going to cover today is preparing a cash flow statement. This will show all the stuff we've just spoken about, and therefore will show any potential pinch points in cash. Here is an example of a weekly cash flow. Very high level, it shows the debtors and creditor payments coming in and out of the business, as well as all the tax and overhead payments that we've discussed. In this example that we are showing, we can see we have a slight issue in week 6 of this cash flow where we go negative in the red. Now we can set a strategy to deal with this. As it is only a temporary 2-week issue, it would be pointless to arrange a bank loan or other type of borrowing just for 2 weeks. If you have already agreed an overdraft with your bank, then as long as the amount is within your overdraft facility, you should be fine going into the red for a few weeks. However, if not, then we can try one of the following. Firstly, negotiating deferring payment to one of your main creditors as a one-off by, say, 2 weeks or 3 weeks. Secondly, seeing if your client will pay you early. Or thirdly, calling HMRC to agree deferment for your tax liabilities. By taking action early and not simply burying your head in the sand, this will ensure that you can deal with these one-off issues without any lasting long-term damage to your business. I hope you've enjoyed this video today. Don't forget to hit the like and subscribe button. Please feel free to watch some of my other content, which I hope you will also enjoy. Thanks for watching, and I look forward to seeing you again in the next video.